Hi everyone, good morning and welcome to today's morning report with me, Richard Perry, Markets Analyst at Handtech Markets for Wednesday the 11th of June. The European trading session has actually started on the back foot, and I think there's a bit of caution that's come in on the fact that these US markets are really failing to gain any further upside momentum. The S&P is fairly overbought at the moment on technical indicators, and you're seeing a little bit of just uncertainty creep in slightly in trading. The Asian trading session was fairly mixed as well, although the Nikkei was actually slightly higher in fact, despite a stronger yen, and that came on the back of the largest pension fund in Japan announcing that it was going to start to invest in equities once again. But generally, the markets in Europe are fairly negative. The FTSE is off 20 points. The DAX is off almost 50 points, which is almost 0.5%, and that DAX is coming down on the profit warning that we've had from Lufthansa today, early morning. The other bit of caution that's come into the markets has been a couple of things overnight, whereby the World Bank has cut its 2014 growth forecast to 2.8% from 3.2%, and that's just citing the geopolitical concerns in Ukraine that's going to have an impact, and also possible, the rebalancing of the Chinese economy, which has the potential to just cut growth slightly in that in China, and that's resulting in that growth forecast cut to 2.8%. Also, we've had news from Iraq actually that the Al-Qaeda militants have taken over the city of Mosul in the northern part of the country, and that is just sort of brings back into focus the possible destabilisation of the Middle East once again. So just a few things coming in that's meant investors are slightly cautious today. In terms of currencies, not a great deal of movement yet that we're really seeing, and that's allowing the dollar index to fairly stabilise today, following on from this big move, this big break higher that we saw yesterday. That took it to the highest since early February. So a very strong move that we saw in the dollar index yesterday, but that's now consolidating in early trading today. The only real move we're seeing is a slight strengthening in the Kiwi dollar, and that's coming ahead of the expected rate hike this evening to 3.25% that's expected by the Reserve Bank of New Zealand. The economic data that we've got out today, other than that, is the UK unemployment figure at 9:30 UK time, expected to fall to 6.7%, so continuing this impressive improvement in the unemployment figure in the last few months, and also the jobless claims, which are forecast to come in at to drop by 25,000 as well. So some improvement, nice improvement expected there in the UK market. That could certainly have an impact on sterling today. Anyway, onto my chart of the day. Now, I did my chart of the day forecast on the close last night, and basically the close last night we had a very strong rebound intraday, which actually posted what I'm going to call a dragonfly doji pattern, which is basically where you open and close at the high of the day, or thereabouts at the high, and having traded for predominantly throughout the day down, but then battled back into the close. Now that is to be honest, it's a fairly positive candlestick, but it's been followed up by a decline today, so not a great open to the session today, but certainly this is coming up again around about this key resistance mark on the FTSE, which has been hit time and time again. 6,895 is that key resistance high that was the 14-year high that was hit in May, and 74 was the high, or the close yesterday. 75 was the high. So just a little bit of resistance there that the FTSE was still struggling to get over. But you look at these momentum indicators, and they're still in positive configuration. You would argue that you could argue that there's a slight drift in the MACD lines, but certainly being above zero, that above the zero neutral line, that gives us confidence in the medium term. These stochastics are also fairly positive as well, and the RSI is just drifting back again, but the RSI tends to find support around that 50 level, which is a positive factor as well. So I think this chart is building for a breakout. It's just struggling to really find the move above this resistance at the moment, and certainly today's move is not helping that. In terms of support, though, you'd be looking at yesterday's low. This is the intraday hourly chart. Yesterday's low came in at 68.36, so you'd be using that as your first line in the sand. Also, that is where the intraday moving averages, the support comes in. So any move below that would be a bit disappointing, and probably signal a move back towards the range lows anyway, 67.95. But at the moment, I think that possibly we're starting to as I said, come back towards the support, and if it can find support above that 68.36 mark, then we can start to think once again about a retest of this resistance again. But we'll wait and see how that goes. But at the moment, FTSE's down about 18-20 points, needs to find support and start to reclaim that resistance high once again. Anyway, I wish you good luck in your trading on FTSE today, and I will speak to you later. Thank you.